In this class, we can study about structure of commercial banks. We can classify into two: scheduled commercial banks and non-scheduled commercial banks. The scheduled commercial banks we can classify into public sector banks, private sector banks, and foreign banks. In public sector, we can classify into SBI and its subsidiaries and other nationalized bank. Then scheduled banks are those banks which are included in the schedule of Reserve Bank of India. Okay, RBI provides special facilities to these scheduled banks. Some important scheduled banks are State Bank of India and its subsidiary banks, nationalized banks, and foreign banks. These are the main scheduled banks. Next one is non-scheduled banks. The banks which are not included in second schedule of RBI are known as non-scheduled banks. A non-scheduled bank has a paid-up capital reserve of less than 5 lakh. Clearly, such banks are small banks and their field of operation also limited. Then we know industrial banks provide finance to industries. Then foreign exchange banks are there. Then commercial banks which are branches of foreign banks and facilitate international transactions. These are coming under the non-scheduled banks. Then post office, saving bank, cooperative banks are organized by the people for their own benefits. Okay. Then these banks are coming under the non-scheduled banks. Then significance of commercial banks. Commercial banks plays an important role in the development of a country, and economy cannot exist without them. Without bank, commercial banks in the country comprise of State Bank of India and its 7 associate banks and 19 nationalized banks and 29 private banks and 196 regional rural banks and 44 foreign banks. When compared to two commercial banks of England and other advanced countries, Indian commercial banks are not capable for financing huge amount. Okay. Then in London, a single bank has the capacity to give 3,000 crore loan for a power project. Okay, but in India their financial capability is not up to that much. Okay, then what are the sources of funds of commercial banks? Then the sources of funds of commercial banks. We know commercial banks accept various kinds of deposit from publics and lends them same to the needy and needy people. Okay, accepting deposit is one of the sources of funds for commercial banks. Okay, then deposit, transaction deposit or demand deposit, fixed deposit, savings deposit, like that different type of deposit are there. Then this deposit is the main sources. Time deposit, fixed deposit. Time deposit means like for 5 years, 10 years. Then certificate deposit, like that. Deposits are the main source of funds for commercial banks. Okay, then another thing, these commercial banks borrowing from RBI. Commercial banks, as per statutory requirement, keep a certain percentage deposit with Reserve Bank. The percentage varies from time to time. The amount is kept in the form of CRR, cash reserve ratio, and whenever commercial banks is in need of funds, they can resort to the RBI for funds, and that is why the RBI is also called as the lender of the last resort. Okay, then another thing, borrowing from other banks. sometimes commercial banks keep certain percentage of fund with other commercial banks as interbank transaction, as and when a commercial bank is in need of funds, they can avail from their inter-commercial banks. Then from interest from loans, and we know banks are providing loans, then they will get interest. Borrowing from other banks, another source of fund. Then another one is interest on loans and advance. Then it is the main source of funds for banks. Okay. Then profit from operation. Profit earned by commercial banks are not spent entirely. A certain portion of it is kept as retained earning or reserves. Okay. At crisis time, they can make use of this reserve. Okay. Then income from agency services. Then modern commercial banks perform an array of agency function like electricity bill, water bill, cinema ticket, rail, bus ticket, like that. Lot of facilities are providing. Besides, they issues credit card and debit card and make payments for virtual marketing. Virtual marketing means online marketing on behalf of their customers. Okay. For these services, commercial banks charge some fee and they become one of the sources of fund. Okay. Then income from agency also one of the sources of fund. Then factors determining liquidity of banks. Then what are the factors determining the banking liquidity? First one is banking habit. We know the extent of dependence of the people on banks for keeping their liquid resource determines to a certain extent the cash balance to be maintained by banks. Banking habits plays an important role determining cash balance of a bank. Banking habits refers to the utilization of banking services. If the people have e-banking facility like that habit, then the use of cash transaction is reduced and the banks need to keep lesser amount of liquid cash. Okay. Then next one is structure of banking. The banking structure of the country also influence the liquidity requirements. In a branch banking system, the bank can function with less cash reserve because in case of emergency, cash can be transferred from one branch to another. The conditions of locality where the bank is serving also will affect the cash balance to kept by the bank. Okay. Next one is nature of bank accounts. The nature of deposit account like savings, current, fixed affect the amount of cash balance to be kept by the bank. In case of fixed deposit account holders, the bank can manage with less cash balance against current account. Okay. Then type of depositors. We know the type of depositors. Type of depositors is another determinant of cash balance. Then we know the majority depositors of the banks are business firms, schools, colleges, etc. Bank will have to maintain high liquidity because of unpredictable requirements. Okay. Then the nature of deposit like savings, current or fixed, these depends on these. They need to keep the balance or cash. In case of fixed deposit account holder, the bank has not maintained much balance, cash balance, but in the case of current account holder, they have to keep larger cash balance. Okay. But in case of bank has a large number of small depositors, the banker may keep comparatively a smaller cash balance because the chances of such concentrate move are remote. Then nature of advance. The nature of advance bank loans, cash credit, overdraft, purchasing, discounting of bills also affect the size of cash balance of the bank. Next one, seasonal requirements. The banks have to take into consideration the seasonal requirement credit from the customers. It is an established fact that during busy seasons like festivals or harvesting seasons, there is increased demand for credit. Okay, hence bank should keep large amount of cash in their hand. Okay, then banks liquidity depends on seasonal requirements. Then nature of business condition. Okay, prevailing business condition in the country has its influence on the cash balance of a bank. When the condition is good, there is a greater demand for cash. On the other hand, when the business is dull, there is less borrowing from the banks. Okay, then another important liquidity is existence of clearing house arrangements. Cash balance of a bank also depends upon the availability of clearing house facilities. Clearing house settles interbank claims. If there is a clearing house, interbank claims can be settled. Then clearing house also an important factor. Then we know SLR, statutory liquidity ratio, that one we studied already. We studied in, I think you people studied. A bank must maintain minimum SLR of 25%. The liquidity position of commercial banks is generally influenced by the percentage of CRR and SLR. Then another liquidity position is refinance facility. In the commercial banks, bank can obtain refinance from the Reserve Bank. It can maintain low liquidity. If not, it has to keep moderate liquid assets. Then general economic activity. In times of business, banks can manage with relatively small liquid asset. On the other hand, depression, banks have to maintain larger liquidity because there is high probability. Then existence of efficiency of money. We know whenever there is efficient money market, so that investment can be easily and quickly converted into cash. Liquidity requirements of banks will be lower and vice versa.